All right. We are live, aren't we? We are. Fantastic. Hey, traders. Welcome to another edition of Market Update Time. We're going to have a look at the markets, see. Ooh, bam. And I'm gonna walk you through what I see happening right now in the markets, give you guys a bit of an update of what's happening right now and what's likely to come next from this here. So let me do this now. I'm going to get everything set up on my end on here, and I'm going to get straight into a market update. I'll go across all markets today as well too, meaning like we'll look at the silver and gold, silver, the GDX, SIL, stock market, stuff like that as well too. So, hey, Rio, I think that's how you pronunciate your name. But I apologize for that. Hope you're doing well, my man. Alrighty, so let's get straight into this now, guys. And we will get into this here. So one thing that let me start obviously with hey Nick, how you going, man? All right, guys, let's get straight into this. Guys, do not place a trade based on what you're seeing in this session, because trading is risky and it can cause a substantial financial loss. There's no guarantees of making money in the markets, especially if you trade the way most people do trade. And so just be smart about it and make sure you get yourself educated. And it does take you a long time to become a person you have to worry about. It's you have to worry about. Now, let's actually get into today's session. Before I start today's session, guys, a quick little something. I was talking to a guy yesterday and I could not believe it. Quick little story time for you guys. Oh, before I do start, if you guys want to get access to my #1 trading strategy and have me as your weekly coach there every single week, coaching you personally with my other private clients and getting access to my trades and so on and so forth, meaning like I share with you what trades I take and stuff like that, then there's a link in the description below. You can actually go click on that as well too. If you want to, and you can get access to a free trial to the Master Trader Lab as well too. All that sort of stuff is linked in the descriptions below. Now, I want to start with a bit of a story time here, guys. I was talking to a guy just yesterday, and he actually applied for my coaching program. And he was like, John, what's your coaching program about? I'm like, well, first you get access to my trading strategy, and then my job is to help you stay consistent at doing that, because if you stick to the strategy, you're going to do well. That's period. That's just it. So anyway, I was talking to him and I could not believe what I heard. I could not believe what I heard on the phone. And he said he was trading for a while. Trading, I think it was the Forex market. And because he was on a losing streak, his wife said, you cannot lose any more money in the markets. You cannot lose any more money in the markets. So I'm thinking, okay. And so then I'd start digging a little bit deeper to see where he's at right now, whether I can help him or not, and so on and so forth. So anyway, so I was speaking to him, and he said that he had a $38,000 trading account, but $19,000 was in the hole. But get this, it was in the hole with open positions. So what he was doing is he was buying the market, and if it goes down, he'll double up and double up and double up, and then he start to short the same market and do all this sort of short and long at the exact same time, trying to short 2, then go buy 3, and all this sort of stuff. Double up, double up, double up, double up. You start with a small position, and then every now and then, the market would bounce and then he'd get out with a profit and so on and so forth. Well, what's been happening recently, because of what's been happening in the markets, is he is in big trouble right now, big trouble with his trading account, because what is actually happening is he said, well, my wife said I can't lose any money. He said, but I've got open positions that are in a loss, but I still haven't actually made a loss yet because I haven't closed them out. And I said, are you serious, man? Come on now. Come on now. Seriously, the way you are trading is absolutely ludicrous right now. I've been there, I've done that, and I've got my ass handed to me. I said, you are gambling, and it's not the right way for you to move forward in the markets. And I said, the way that you're trading these markets is just absolutely just crazy. And I said, you are going to keep losing money. He's been trading the markets for 9 years. And this is the way that he was trading. I said, man, you're doing everything completely wrong. The way you're looking at the markets completely wrong. I said, you're going to do some damage here. So, and I said, and your ego as a guy is like, well, if I don't close it out, then it's not a losing position, and et cetera, et cetera, et cetera, et cetera. So, and he goes, and his whole theory was, well, if I double up long enough, then we get a bounce and then I get out for a profit. And I said, man, I said, really? I said, how's that working out for you? A $38,000 trading account and you're down over $19,000. You might be lucky and get that bounce and get out, but you don't want to be trading on luck. Like seriously, man, like you're doing everything completely wrong. You need to start from scratch. And I said, what my coaching program is all about is giving you the trading strategy, a simple trading strategy, and then me helping you just stick at that, not do anything else. You do that and be patient and be consistent and don't do anything else. You do well in the markets. And then your job is just to get better and better at identifying that one really good setup. And I said, you do that for the next 12 months, you're going to do well. And so that's basically what I wanted to give you guys a bit of a story about, is that, you know, I've been there, I've done that before, you know, like, you know, it's really, really interesting to see, you know, what was actually happening with him on the phone call, because I can see people doing these mistakes and they think they're trying to do well from the markets. They're trying to make money from these markets, but the way they go about it is completely wrong. Your foundation to your success is, what are you looking for in a trade? What is your trading setup? What does it look for? That's your foundation to your success. If you don't have that, then it doesn't matter how much time you look at the charts, how much time you're focusing on the charts, how much consistency, discipline, and you being patient with the market is going to help. That if you don't know exactly what you're looking for in a really good, high quality setup that you know is going to work for you, it's going to make a generated profit more times than not, then that's where you need to start. And then with my private clients, what I do is I teach them my trading strategy, very simple trading strategy, 90+% success rate. Right? No one can. That's the success rate. You know, almost every single trade generates a really, really nice profit, but there's not a lot of trades. The thing is this, is that, and then my job as a coach with my private clients is I get them to get better at identifying that really good setup, right? Because once you learn the system, it takes you a good few months to learn the system, a good few months to learn how to identify it in real time. But then after that, then my job is to keep them on being consistent, disciplined, and patient, and only taking that setup. You do that for 12 months, you're going to do well. That's the path to your success in the markets. And so if you are struggling with your trading right now, if you're doing really, really, really difficult in trading right now, you must have a hard look at yourself and say, am I still doing the same thing over and over and over again, expecting a different result? Because I'm telling you right now, I have the t-shirt with about 1,000 houses and about 10 cupboards. You know, all my cupboards are full of that t-shirt of doing that same mistake. And that's how I can look back right now and say, man, this is where I totally screwed up. I totally screwed up here. And it was completely wrong. And, you know, and I shouldn't have done that. So, so that's the bit of a backstory, a bit of a story for you guys to help you guys out when it comes to, let me just, open my window. It's getting hot in here. So that's a bit of a story for you guys, and I hope that story resonates with you somehow. Once again, if you do need my help, then go to apply for the coaching program, and I've got one spot left open for the year, and I may or may not be able to help you out. But that's, no matter whether it's me or someone else, that's your foundation to your success, right? That's how you want to truly move forward in the markets. So let's actually talk about this here. Let's actually go through the markets now, guys. As you can see, I'm looking at the markets right now. What we have here is silver to the top. We've got gold to the top, silver to the bottom. We've got the GDX here, which is the GDX, obviously gold stocks, and also SIL through here. We have S&P 500, NASDAQ, the Russell 2000, and the Dow Jones as well too. So I normally have this on one screen, And then the reason I have that on one screen as I'm doing my analysis on other screens, so I can just keep an eye on what the overall indices and what the overall major sort of indices are doing right now. Like all the indices, silver and gold, and the main indexes for silver and gold as well too. So let's actually go over to here right now. Let me give you guys a quick little update what's happening right now on the markets. Firstly, let's start with the indices. So the thing is this, guys, is that firstly, by looking at the Dow Jones, we are still at this really massive conjunction area right here right now. Massive conjunction area. And this massive conjunction area right now, where we are right now, we're still at this X marks the spot here. So again, I wouldn't be too surprised to see some downside coming soon. And on top of that, if I take everything off the screen here and open this right up, we can see we actually have, I won't bring it up here. Let me bring this up here. All right, so we can see that we actually have this gap through here that still needs to be filled on the Dow Jones. And we're still rising up through here. So if you've been following along with my market updates for the last few weeks, you've been saying, you know, that momentum for me shifted down here to the upside. And it has not gone to the downside yet, and it's still going up. So that's where people say the market's definitely going to turn tomorrow. We're definitely going to go down tomorrow. There's no indication of me saying momentum is shifting yet. Momentum is still to the upside on the Dow Jones, and it still is to the upside right now. We need a close below 24,400 for momentum to start the shift from a down leg to an up leg. So we shifted here. We went from this candle here, this big red candle where my green arrow is, that's where the market shifted. And then this down leg, and this is where from here to here, that's where momentum started. And then so momentum shifted from here to here. Actually, you know what? Let me do this here. All right, let me do this. I'm losing it today. Let's actually do this here. All right, I'm going to bring up my good old Snagit tool. And so this is how the momentum shift has worked and what I'm seeing here. So firstly, by looking at this markets right now, I see the momentum shifted from here to here, and then it shifted up. It shifted down a little bit, and then the very next day it shifted up. But it's been up ever since. Momentum has been up ever since. Now, what I mean by momentum is I'm not looking at an indicator. I'm just looking at basically the lows of the bars, basically the lows of the candles. And if a lot of the lows are not being broken in a row, well, then momentum is still to the upside. And you can see what I'm talking about there, where a lot of the lows of the candles are not being broken as this market goes up. And so we've been to the upside yet. So we haven't actually shifted yet on the downside. So if you think we're going to get a pullback tomorrow, you may be right. You may be wrong, but I don't know about that. For me, there's no, but once we do get the shift, and if we do get a break below down through here and close the gap and get a break below down through here, then that's going to be a complete momentum shift in the markets. And then we're probably going to start to see a run back down towards the lows through here. But you first need to see that momentum shift on these legs through here. Now, yes, overall, sellers are still in control. High, lower high, and still a lower high through here. So we still are getting lower highs on the Dow Jones. So the sellers still right now are overall in control. But even in a downward market, right, you get a drop, you get a pullback, you get a drop, you get a pullback, get a drop, get a pullback. Lower high, lower high, lower high. That's a downtrend, right? High, lower high, and and lower high through there. So that's what I'm looking at there right now. And the same for the S&P 500. If I look at the S&P 500 and I look at that, once again, the market hasn't actually changed. It hasn't actually shifted. We had a momentum shift from this candle here, and then it changed to that candle there. We had a bit of a momentum shift up. It shifted down. The very next day, the momentum completely changed. So it didn't even follow through. And then ever since this candle, momentum has been up ever since. And what am I looking at? I'm basically looking at these lows of the bars. And whenever you get these lows of the bars, whenever you get a couple of consecutive lows of the bars being closed below, that's when you start to get momentum shift. All right, you're looking at a couple of consecutive bars. So, but as you can see, right, we didn't get a couple of consecutive bars being closed below, closed below, closed below. So right now, this is the level for me right now to see the Dow Jones the S&P start to change trend. Once we do get a close below this level through here, then that's when we're probably going to start to see a nice sharp drop back down. And same for the Nasdaq as well, right? Same for the Nasdaq. Now the Nasdaq's looking pretty strong once again. But firstly, what do we get? What do we have here on the Nasdaq? We have what? We have a, let's do a circle here. Let's do it orange. We have a high, lower high, lower high, lower high. So this could be some sort of lower high here still. It still could be that. We don't know yet, but that's what's happening right now. Once again, momentum is still shifting to the upside. I'm looking for a couple of lows of the candles prior to that to get closes below, and we didn't get that. So we got a momentum. So once again, momentum shifted from here to here. Then it ran back up, shifted down for one day. Very next candle shifted back to the upside, and now we've been up ever since. So we haven't actually got a momentum shift to the downside. So once we actually get that momentum shift back to the downside and we get a nice close below this level here, that's when we're probably going to start to see some significant strong selling out of the markets. But until that happens, don't expect the market to start to change straight away, because it may or may not happen. We may still continue up from here because short-term momentum, yes, the overall market is stair-stepping down, but this short-term momentum on this leg is still going up. So I wouldn't want to be fighting it at the moment as well too. But once again, the Dow Jones is the one thing that I'm really looking at. It's like, bam, that's what I'm looking at there. All right, cool. Let's move on to silver and gold right now. So silver and gold right now, beautiful, beautiful little nice little upward trend on the short term. That is right, moving up, sideways movement, nice big breakout bar, and then we've actually continued up just slightly through here. So silver and gold's a bit of a tricky one. Yes, we're still continuing up on a very nice upward trend from here. All right, but silver and gold is a bit of a tricky one, only because this short-term picture is this is the channel that it's in right now, as you can see. But that long-term picture is still question mark, like what's really going on in the overall picture here. We're getting that short-term move to the upside. But we just got to see what happens. We're not out of the woodworks yet, meaning the seller still could come in and have a nice move down. Same for silver and gold as well too, right? Like look at silver. It just broke past its highs. It just broke past its highs and it's failing already. So that's actually not a good sign. Well, there you go there, right? So that's actually not a good sign. And if you look at the weekly chart, we still could be making another lower high here. This could be some sort of a false little rally, and then the market actually, and then the market could actually start to sell off from there. So really, really interesting. Looking at the SIL, we're starting to get a little bit of a strength through here, a little bit of a higher high, higher low, but the overall trend still hasn't changed. The major trend still hasn't changed. We're getting a short-term little rally, but that major trend still hasn't changed through there. Same for this GDX, right? Like who says this SILJ? Who says the market couldn't rally back up, hit resistance, and then start to actually rally back down again? And that's still possible, right? Because look at every single time we created a lower high through here. And if I bring up this good old Snagit tool again, look at this here, guys, right? High, lower high, another lower high, a lower high, a lower high. It's another lower high. So we still could be getting another lower high, or maybe even an equal high here before we get a drop down. Now, I guarantee you these points through here, from here to here, from here to here, from here to here, and now from here to there, on that daily chart, what are you getting? Right? You're getting a short-term little higher highs, higher lows, aren't you? But that's the reason why you want to keep an eye on this weekly chart, because even though we get a rally back up, the sellers could knock it back down really, really quickly. Looking on through to the GDX right now. Now, the GDX is one that is showing a lot of strength, because it's breaking past now previous highs. It's breaking back up again. It's breaking now through. So I actually see the GDX now, since it's done, I see the GDX back up here at this level up here, probably the $25 level. I think that's where the GDX is likely to run to. I'm not saying it's going to run there straight away, and I'm not saying place a trade based on that, because I don't know what's going to happen. But looking at this here, we may get a bit of a pullback through here on the GDX, but I actually have a target of $25 now, up the top here on GDX, that's short-term target. And if that happens and we start to break above that $25 level, then I do believe a couple of year bull run is about to start. Now, guys, please listen to what I just said there. A couple of year bull run simply means this, that the market will probably go for a nice run and then we'll have some sort of a pullback. It could be a 50%, 60% pullback or whatever, right? How a bull run works, it doesn't just go straight up like that. Stop thinking that. Don't ever think that's going to happen, because it's not. You're not going to get a vertical spike like that. And no matter what videos you watch and say, we're going to get a vertical spike, it's not going to happen like that, okay? What's going to happen? The market's going to run up, then we're going to get a nice pullback roll. And we're going to go for a run up, we're going to get a nice pullback. Yes, we may go through a bit of a vertical spike like that. And if that happens, guess what? We get a really, really, really big spike like that. What goes up really, really quickly? Guess what? Comes down really, really quickly. And so that's what I'm seeing there right now on the GDX and also on the GDXJ as well too. Same thing. We're breaking up higher high, higher low, breaking through, volumes coming through as well too. We're breaking above these levels now. So I actually see the GDXJ up there at sort of the $36 level. That's my target now on this one here. Oh, excuse me. I just sneezed. So that's basically what I'm looking at there, guys. So we are getting a complete shift in the markets. As you know, for the last few months, I've been pretty bearish on the markets because that's what I've been looking at the charts. No one knows what's going to happen. But now the overall sentiment is changing. I'm changing with it. Now, as you can see, right, the silver is still question mark. But these gold stocks is giving a lot of bullish signals out of this here. And just by looking at this here, once again, I have a target now of $36 on the GDXJ. And a $25 target now on the GDX. That's where my target is right now. I was actually bearish there for a while because we still could have possibly got another lower high through here and broken down, but the market didn't do that for us, right? The market completely shifted up, and now we're going up through here. So we may quickly run up through there, or we may slowly step up through there, or it may not happen at all. It may just simply go back down. So you need to be wary of that. But I'm completely shifting my bias now because the market's shifting with it. So I have to go with the market. I have to flow with the market. Flow like water. I have to flow with the market, right? So I have to flow with the market, and we're now getting a lot of bullish signs out of that. So I'm looking at silver and gold itself are still question mark. The silver stocks are still question mark. The gold stocks are showing so much strength right now amongst, like, the gold stocks are showing more strength right now than a lot more bullish formations than all the other metals out there. So it really, really, really is interesting to see that. Once again, I do see a nice little run back up towards that $36 level on this GDXJ level. GDX, we're probably going to get a little bit of resistance at that 34, but just really, really, really nice upward trend right now. We're definitely shifting. There's a lot of buyers coming in right now. So this could be the start of that next big bull run. Let's go. Let me have a quick look at a few stocks here. Firstly is going to be Apple off the rank. Firstly, Apple had a nice bump to the upside. That was sort of expected. Why? If you understand how the markets work, and you saw this with oil as well too, if a market has been going down for quite some time, now you don't know when it's going to end, you are expecting what? At least some sort of a pullback, aren't you? Because the market never just goes straight down. Look how long this has been going down for. So this is just a what? Just a healthy pullback. Now, let me go back to my charts. Look where the market stopped. Where is that? Look where it stopped. It stopped right at my long-term weekly trend line through there, and it's just paused there for the last couple of days. This is back to the daily chart now. Pause there for the last couple of days. So I still actually have a target of that 120 to 130 level, this bottom trend line here on Apple. This big selling movement, guys, I promise you, is a precursor to a lot more downside to come over the next couple of years. We may get a strong rally out of this, maybe even back up to 180. But what I do see overall is this, I see this bit here, and even if this is going to form some sort of right shoulder through here, the precursor for me is nothing but down. So short-term rallies, that's that daily short-term movement, but the big picture there is down, down, down. Now, Amazon actually got a bit of a selling movement today. Now I'm obviously doing this just after the market close. So Amazon was actually down a little bit today. What's still going on with Amazon? We're still getting what? Now, firstly, Amazon's a bit of a mess, isn't it? Let me bring this up through here. So firstly, what are we getting with Amazon? We have a high, lower high, equal high. So this could be some sort of lower high through here as well too. We're still getting lower lows through here. So nothing has really changed. Now, for me personally, looking at Amazon, this is actually looking like a really, really nice setup. Not for me to go short, by the way, but I'm saying if we start to close below this $1,600 level, guys, and we have volume come through, if we start to get a close below that $1,600 level, then there's a high probability we're going to challenge these lows down the bottom here. If we now, once again, guys, we'll talk at that. We're talking about like the momentum, right? We're talking about the momentum shift, the momentum in the markets, right? So short-term momentum's been up sideways. There hasn't been a very strong, momentum close yet. But if we get a close below that $1,600 level, that's going to be momentum shift back to the downside with these lower highs. Then that tells me we have a high probability at least challenging these lows through here, possibly even then breaking those lows and seeing a lot more downside to come. So if that happens, then the Nasdaq's probably going to follow with that as well too. So there's some of the main stocks there that I've been looking at there as well too. Oh no, sorry, just some of those big stocks we're looking at there. And just there's a bit of an update for you guys. Again, two of the main stocks I've been watching this last week really has been Amazon and Apple. No, I've been watching all the stocks, but I've just been keeping an eye on this one here, and that's what I see there happening in the markets. All right, guys, let me go through and I'm going to answer some questions for you right now. Why are markets moving so slow? In December, the moves were fast and brutal. Arul, that's actually a really good question. Why are the markets moving so slow? Well, think about the market as an energy resource, okay? An energy resource. There's two things in the markets that are true. One, the market's like an elastic band. Now, what I mean by that, if I go back to oil, remember I was saying before with Apple, right? The way the markets work is that if we get too much of a selling period on a downside, we're expecting what? We're expecting a pullback. So because we actually had a lot of downward movement through here, and this is actually a pretty powerful end of move indicator. When you get a big drop and you get a little pullback and then another drop, and it's very short-lived, and we start to rally, that's a bit of a precursor that we're going through a bit of a pullback phase, and then the market rallies through there. So the thing is this: is that think about now. That's how the market's like an elastic band. We get too extended on one side, just like GE, right? Just like GE has done. We've just been going down. Now we're getting a bit of a pullback right now on GE. So think about that as the market's like elastic band, but also think about the market as an energy. If the market's moving radically for quite some time, like we see right now, I'll say on the Dow Jones. Let me remove everything off the screen here. Actually, let me just go back to a blank chart because that's what we need. If the market's moving radically for a while, then what's going to happen is the market is going to slow down because it's an energy resource. Think about that. When the market's moving, it's using a lot of energy. Then after a while, it needs to slow down to build a lot of energy, then start to make some nice moves again. So the thing that you want to be careful on this up move here is whenever we get an up move that looks like this, just small bars all the way up. Just be careful because something could trigger and we could get a big down bar really, really, really quickly, right? And what I mean by that is look at this up move through here. If I bring back, say towards the late last year, look at this here. Look at all of these candles moving up. So yes, we were moving up, weren't we? But it's very, 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 very slow. And then suddenly, bam, came down. We're not getting a lot of conviction, right? We're not getting a lot of strong green candles. We're getting small green candles. That means this is a weak rally. It's not strong, right? This is from here to here's a strong rally. From here to here's a strong rally, isn't it? But it's not a strong rally in the markets. So right now when we're looking at this, the reason why it's slowing down is because It's trying to decide what's going to happen next. And because we are still on the downside, there's a still high probability chance that the market's going to die. I said that on yesterday's session. Oh man. Alrighty, so that's all that's happening right now. Just look at the candles there, that's all. Let's actually continue here. Reading the charts, can we keep moving higher with without a pullback and start a new bull run? Well, we can do anything in the markets. That's what we must understand, is that the markets can do whatever it wants to do, right? We can keep going higher. Now the markets won't just keep going up, real. We will get some sort of a decent pullback out of it. And by looking at this move to the upside, this move has actually been quite weak to the upside. Momentum's been strong, like there has been, keep going up, but look at all these small little green candles here. That tells me that the market, this rally here, has been really, 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 really weak. It's very weak. So this could be some sort of precursor for some sort of big selling that happened in the market. Something's going to happen in the markets, you know, maybe some news or something like that, and then bam, we're gonna get a big red down day, and the market's going to freak out, and then we're probably going to start that selling off there. My bull friends are laughing at me. I told them to talk to me again in 6 months. CH, you may be right. You know what I mean? You may be right, but you know, who cares about your bull friends? You know, seriously, I think your bull friends are going to be, you know, going to get their ass handed to them, you know, within the next couple of years, because I do see this market being on a downward movement over this next couple of years. Now, remember, guys, one thing that's so important to understand as well too, with a crash doesn't happen in 1 day or 1 month. Right? Remember, what was 2008? 2008 stock market crash was 2008. It took 12 months for that thing to unfold from top to bottom. So I hope you can see, I hope you can look at this and say, okay, when's the crash going to happen? If you think about it, it actually takes a while for the market to go through a nice, decent pullback in the market. Call it a crash, call it whatever you want to call it. Right? That's what actually happens. So you've got to stop thinking that the market is just going to go straight down and straight down and straight down and straight down, and that's going to be the crash. And when it's going to get that, like, don't think like that, because that's not how the markets work. Even if the markets do have a bit of a drop down through there, I guarantee you, yes, the government will come in and try to support it, and they'll try to find a bit of floor in there, and then the market will rally a bit. But that's how the markets work. Even in, you know, if I bring back my weekly chart, and actually not, let me bring back a 6-day chart. Right, and let me go back to through to 2008. Look at this here. This was 2008. The market started this market. This is where the market actually. This is 2008 here, and this is 2009 down here, right here. Right, it was actually just a few months into 2009. But look at that. That whole thing. What happened? We actually got what? It wasn't straight down, was it? We had a drop, then we had a nice pullback. We had a drop, then we had a nice pullback. We had a few strong weeks, and then we went sideways for a while, and then we got a drop. Don't be afraid of these markets, guys, and don't try to predict the next big crash and all that sort of stuff, because thinking you're going to make a fortune overnight, that never happens. Yes, we could get some sort of a vertical spike up, a vertical spike down, but don't be trading based on that there. It's so important there. What is your average trade per month and hold time? Thank you. My average trade per month. I'm not sure what you mean by that, but my average hold time, well, that's different. That's different. If I have a daily trade, I could be in that for a week. I could be in that for a month. Could be in it for a couple of months. If I'm trading a short-term market, like maybe a 2-minute chart, I could be in that for as little as, I don't know, 15 minutes. And then sometimes if I'm trading, say, a 5-minute chart, I could be in that for a couple of hours, depending on the setup. Meaning, like, I get in the markets and then I let the markets tell me when it's time to get out. So I get in when there's nothing happening, and then I'm looking for a big move up, and then from that I'm looking to capitalize it. Because sometimes I have my trading set up, but depending on what's happening around it, that can give me a good indication that we're getting ready to go for a big bull run, like a big run out of this. So yes, I have my trading set up, but how I understand how the markets work, and that's what I teach to my private clients, is this is what you want to look for to see whether we are going to go for a nice run. I'll give you an example of that. Let's go through here. Right, so this one here was a setup of mine just recently. Right now, this is a 2-minute chart. right? Now, I took a trade during the week and I was in and out within say 2 minutes, right? But this was my, let me do this here. Right, so this was the NASDAQ. This was the entry bar through here. So I got in at the close of this bar. That's where my entry is. But because of this setup here, this setup told me that this now has a lot of room to run. So instead of me expecting a short-term move, like getting in, maybe get out within a few bars, I knew that this actually had a bit of room to run. So therefore, I got in this was at 2, 4, 6, 8, 10, 2, 4, 6, 8, 10, 2, 4, 6, 8, 10. 2, 4, 6, 8, 10. So this is probably close to an hour, I would say. Probably close to an hour worth of movement before I end up getting out of this. So again, it's really, really, really important to understand that I have a good trading setup, but if I get a certain setup that appears, that gives me a very high probability that this has now got a lot of energy to go for a good run, right? It's not just going to be some sort of short-term run. So I have my trading setup. I'm like, you know what? This is probably going to be some short-term move. I'm going to be in and out within a few candles. That's the trade. But then there's some setups that say, you know what? Get ready because this could be quite nice. The stock market has predicted 9 of the past 5 recessions. Look at the highs and lows, my man. Look at the highs and lows. You can see back in 2008, right? 2008 was based on those highs and lows. Big gold miners are buying small miners, gold, testament, because of the stuff that is happening to hard find the bullish gold, bruh. Bruh. You and your bruh, Trent. But yes, the gold stocks and the gold junior stocks are looking so bullish compared to the gold and silver markets itself. Meaning, I'm talking about the formations in the markets, okay? I'm talking about the formations in the markets. Yes, gold may be going through a bit of a bull run, but looking at the actual formations that I'm seeing on the charts right now, the gold stocks are looking really strong right now. Only 3 types of bars: inside bar, outside bar, and bar that breaks in a direction, defining the trend, in my opinion. Not really. It just means it's an up bar. You've got inside bar, outside bar, and then you've got an up bar, and then you've got a down bar. Now, you've also got that up bar could be a bullish up bar where it opens and closes in opposite thirds, or it could be that down bar could be a bearish down bar, which opens and closes in opposite thirds. Right? So if you have, let me do this here for a minute, looking at the candles here. Right? So if you had say this bar here, right? So if you had this bar here and then you had this bar here, that's an outside bar because the high is higher than this high and this high. If you had this bar here, this is called an inside bar because the low is lower, the high is lower than the previous bar and the low is lower than the previous bar. But if we had that bar there, what is that? That's a down bar. But what gives that more validation or more strength is depending on where it opens and closes. If it opens and closes right there to there, that's actually a pretty weak bar, right? But if we open up the top here and close down the bottom here, that's a very strong bar. That's called a bearish down bar. If we open and we rally up through here, again, depending on where it opens and closes, if it opens in the bottom and closes in the top 1/3, then that's actually a very strong bar. It's actually it's what's called a bullish because it's open and closed in opposite thirds. So that's basically what you want to be looking out for. So depending on where the market, not only the type of bar, but where it opens and closes is showing strength in that direction. That's for that bar anyway. They're moving slow because exactly right, Trent. Yes, they're moving slow because, as the saying goes, with stocks, they go up by the stairs and out by the window. Exactly right, Trent. Yes. So are you trying to tell me that you think that you do believe that it's going to go out the window soon? Are you starting to get on the bear camp for a while? What do you think about C? Firstly, it's not, I don't really care what I think, but C is, C is actually a bit of a hard one because you've got a lot of resistance points where it is right now. So it's still in a big, massive downward trend. Well, we're getting a bit of a changing trend now. So I don't really know anything about this. Again, for me personally, like it's we've got a downtrend, but now we're starting a new uptrend. So there's no real at resistance. There's no real good high probability thing here at all. For me personally, there is no trading setup. So I'm not going to get into a stock just because I think it's a good idea. I want to see my chart pattern. That's what I want to see. Let's actually talk about this here. Is the monthly chart reliable trend forecaster? No. No. There is no real good reliable trend forecaster. You want to be using the weeklies and daily charts. Weeklies for that overall trend, and that dailies for the short-term movement. Fang stocks and QQQ on the watch for weakness. Yes, offers. Yes, that Amazon stock. If we start to close below there, that Amazon stock is going to get absolutely hammered. If that happens, the Bears are in control. Lovely accent you have, New Jersey. EBP. We'll have another shrimp on the barbie. Well, it's not New Jersey. I'm actually Australian, so thank you for that. I'm New Jersey. Yeah, thanks, Ricky. Yeah, I'm from Sydney. Yeah, that's right. EPP. I just saw that. Yeah. Do I trade forex? Oh, yes, I do. Yeah, I actually had a forex trade. A couple of forex trades. This was one forex trade that I took. This was one trade that I took this month. I think it was towards the USDC I did. So yes, I trade the forex. I trade forex. I trade futures. I trade the cryptos whenever they set up. That is, and I also trade stocks. I trade options over stocks, and then I use the futures and so on and so forth for that. So, but the thing is, guys, is I have the same setup for every market. So the setup that I look for, if I'm looking at a 2-minute chart, I'm looking for that setup on the 2-minute chart. If I'm looking at a 15-minute chart, doesn't matter what chart it is. I'm just looking for my same setup. That's simple as that, guys. I keep it so really, really, really simple. James, you'll have to watch the replay, man. I'm not going to go over silver and gold again. So yeah, so Ricky, I do. The thing about forex markets though is that I don't trade the daily charts. I'm more of a short-term or more intraday trader. So I'll sit there for 5, 6, 7 hours, sometimes longer. When I'm trading that, I'm just watching all these indices or futures markets, gold, silver, all those markets, intraday basis, and the crypto and some of the currencies, and I'm trading those. And I'm just waiting for my pattern setup. What do I think of Cron? Well, that's obviously crypto. I don't know. I'd say stay away from cryptos right now until they sort the shit out, basically, because there's so much happening behind the scenes you don't know. So I'd say stay away from the crypto market. Unless you have a good proven pattern that you see on the markets and you want to get into it. Like last year, I shorted Bitcoin and made a nice profit from that as the market started to pull back. What broker do I use? I use Interactive Brokers for my options over stocks. And then I use another brokering platform that has everything, the Forex, the futures, and also I can trade a thing called the CFD as well too, over the stocks if I wanted to. I mean, see the China index, sorry. Oh, okay. I'm not sure about... Oh, I can't get the China index up, honey. I don't know. I haven't got my actual futures platform up here, so I can't see the China index. Oh, Cron is cannabis. Oh, okay. All right. Well, let's have a look at Cron. What goes up must come down. That's what I think about this one here. If this is the stock you're talking about, then what goes up must come down. Do not be trying to get into something, guys, after it's had a big run, because you're going to get your head handed to you. That I had so many people. Same with natural gas. Look at natural gas. As soon as this thing took off, I guarantee you so many people jumping on because they think it's going to keep going. They don't understand how the markets work. And then look what happened. Bam. Came straight back down. Do you do any investing? Anything looking hot at the moment for buy and sell and leave? James, no. Your job, James, is to trade your proven trading setup and only that. I'm not going to give you the next hot tip or the next hot stock. And if you don't have that, that's where you need to start. And until you do that, you're never going to get ahead in the market. Alrighty, guys. Well, if you'd like to get my weekly coaching, I have one spot left open, guys. So if you want to get my weekly coaching and understand my trading system for the rest of this year, then there's a link in the description, meetme.so/John9. If you'd like to get a free trial to my Master Trader Lab, then just go to mastertraderlab.com. All right, guys, that's it for me. Have a great day, and I'll speak to you next time.